Good afternoon everyone and welcome to the James Cooper Creston webinar on the topic of R&D tax relief. Today I am joined by Margaret Savoury, one of our tax directors who specialises in the tax innovation reliefs currently available. There is the facility on your screen to ask Margaret any questions and she will answer as many as she can towards the end of the webinar. I'll now pass you over to Margaret to take you through the presentation.
Good afternoon everyone. As you can see, the topic today is R&D tax relief, what's new? R&D tax relief was introduced in the 2000s and has been subject to various amendments over the years. So in this talk I'm going to start by looking at what the current status is and then refresh you on the main rules to remind you of what the various reliefs are. And then finally, I will think about giving you some practical tips and things that I've seen and encountered over the 10 or so years that I've been dealing with R&D reliefs. I've only got 25 minutes or so to speak, so there may be areas where I skip slides, but they're there for completeness as the webinar will be available afterwards. And if you have any questions, please ask me at the end, or you can send me an email and I'll try to answer them. So, without further ado, let's think about where we are now. So, in the autumn statement of 2016, Theresa May said, "We are ambitious for Britain to become the global go-to place for scientists, innovators and tech investors." And one of the things in their suite of armoury to encourage this high-tech investment and innovation is the R&D tax credits, of which the government is very proud. They're also pleased to see that year on year the uptake of this is increasing, and the 2014-15 year is the year for which the latest statistics are available, and in that year there were 22,500 R&D claims made, of which 18,000 were from SMEs, and this was a substantial increase on the previous year. So they are seeing increases every year, but they do feel more claims could be made. Additionally, in the autumn statement, to back up their ambitions for the go-to place for scientists, they announced an extra 2 billion per annum support for R&D, and that will be 2 billion a year coming on stream by 2020. We still don't know the details of that yet, and whether there will be changes into the percentages of R&D credits, we don't know that. So that was autumn 2016. We then move on to the spring budget in 2017, and more specifically they talked about amendments they're going to make to the R&D relief. They said, this is verbatim from the budget statement, they talked about making administrative changes to R&D tax credits, which we believe is the large scheme, the RDEC, and following the review of the tax environment for R&D, and they also want to improve awareness amongst SMEs, so they still feel there are not enough SMEs taking in the tax credit. Of course, that was in March 2017, and we all know what happened next. There was a snap election, and effectively all government departments go into purdah, and they've only just come out of that. So at the moment we haven't any further detail on what is going to be looked at. So that's where we are at the current status. They are going to look at things, nothing has changed legislatively. If we look backwards to 2015, the last time they consulted and made changes was in the 2015 budget. They had a consultation and they pronounced on that consultation in a document called Making R&D Easier and gave out their plans. And they had 4 heads for those plans: awareness, design, understanding and administration, and they announced some changes and areas that we're going to focus on over the next 2 years, so broadly taking us up to the end of 2017. Under awareness, they agreed there should be more communication, and they were going to work across government to perhaps identify companies that should claim R&D, because they felt not enough companies were claiming the R&D relief. In terms of design, and we'll talk more about this later, they agreed that the definition of R&D for tax relief purposes was actually fit for purpose. These definitions have been around since 2004, modified in 2010, and it was agreed that actually they are fit for purpose and they should stay how they are. They also announced that they will have a review of the treatment of subcontractors, and I will touch on that later as it is an area that is quite complex. And they would align the design of R&D with their Making Tax Easier project, which is an across-the-board project, not just related to R&D relief. In terms of understanding, they said they would improve the guidance on grants and state aid, another area of complexity, and I will touch on that later, and they have and will do so develop templates to ease with making R&D claims. In terms of administration, they introduced in November 2015 Advance Assurance, and this is aimed at very small enterprises who are claiming R&D tax relief for the first time. Turnover less than 2 million, less than 50 employees, and if you submit certain details to HMRC, they can give you advance assurance you do qualify, and they promise they won't inquire for up to 3 years after that advance assurance is received. So having looked at the current status as where the thinking is, I would now like to move on to broadly a refresher where we look at the current rules for R&D relief. And this slide is just an overview, and it's worthwhile highlighting a few key points. The first thing is that to claim R&D relief, you must be chargeable to corporation tax. So that means you either must be a company or you must be a corporate company member of a partnership. So if you're just a sole trader or a partnership on your own, you won't be able to claim R&D tax relief. Assuming you satisfy that, there are two key things that you need to satisfy in order to claim relief. You need to look at what qualifying projects you are, and in a moment we'll take a look at the definition of R&D for tax relief purposes, which is different from the definition for accounting purposes subtly. And then the second strand is what qualifying expenditure. So having identified that I'm undertaking some qualifying R&D work as defined in the government definitions, what expenditure can I claim? And then finally, having identified those two, we need to work out which scheme we claim under, because there are two R&D schemes, and I'll talk about those in a moment. And that's broadly the R&D claim process. So as I mentioned, there are two schemes. There is the SME scheme, small and medium-sized enterprise scheme, and the large scheme. In terms of the small and medium-sized scheme, it is aimed at those that are smaller enterprises, and it's actually quite a large test. This is not just the entity, this might be the group as a whole if you are part of a group, but it is basically if you have fewer than 500 employees or full-time equivalents, if you have a lot of part-timers, and either one of less than turnover less than 100 million euros or gross assets less than 86 million. The things to watch are these are group-wide limits and they're EU limits, and the rules do get quite complex as what do you include in a group. But if you're a standalone entity, it would just be your own size that you would check against these limits. The other scheme is the large scheme. The large scheme is now being rebranded, changed in 2013. We'll talk a bit about that later. And you might have heard it called above the line, or now it's officially called the RDEC, or the R&D expenditure credit. This was introduced in 2013, it became mandatory from the 1st of April 2016 and replaced what was known as the large scheme. This is aimed at the large companies that don't satisfy the SME limits, or in certain circumstances, and we'll talk about this later as well, SMEs may only be able to claim a certain amount of expenditure under the RDEC. And they have slightly different ways of calculating how you get the relief. In terms of what the relief is currently worth, over the years they've tweaked it slightly and certainly made it more generous because they've realised it's at the SME end, the small innovator end of things that they need the additional financial support. So for having identified the qualifying expenditure, basically you get enhanced relief of 230%. So in your corporation tax return, if you had £100 of qualifying expenditure on R&D, you'd normally get that as a profit and loss deduction in your tax return. What you also get if it qualifies for R&D relief is an additional £130. So effectively you get £230 deductible in your tax com. So effectively you get an additional tax benefit of £130 times the current corporation tax rate, which is 19%, which is £24.70. So that's if you're profit making. So you get a reduction in your tax bill. Often lots of R&D startup companies make losses. So what they have is a tax surrender scheme. So what happens there is you take the £230 of losses that you have, expenditure that you've taken from the £100, and you surrender that £230 currently at the rate of 14.5%. And that effectively gives you 33.35 pence in the pound refund. So if you had £100 of qualifying R&D expenditure and you surrendered it for losses, you would get £33.35 back. And that is a real cash flow benefit for loss-making companies. Very popular. Last increased in April 2015. It might go up again. In terms of the large scheme, this, or what's now known as RDEC, this is less generous. How the RDEC works, you identify your qualifying projects and qualifying expenditure in the same way, but then there is a different methodology. And how it works, if you look at the right-hand column there, is what you currently get is an 11% taxable credit, and that is actually brought into the accounts. So you work out what your qualifying expenditure is in the normal way. Say it's £100,000. Then you would say, well, let's multiply that by 11%. £11,000, I will bring that in above the line. So that becomes a taxable credit in my P&L. I then get taxed on it, currently at 19%. So that effectively the benefit is an 8.9% grant or cash from HMRC. This replaces the previous large scheme, which used to be calculated in an uplift methodology. And it was mandatory for these new rules from April 2016. So that gives you an overview of the scheme and how you benefit. In terms of the qualifying projects, we look at the definitions of R&D. And at the bottom there, I've given the source, which if you Google that, they will come up. Those are like the DNA and the Oracle. This is the definition that everybody uses in terms of working out whether a project does qualify. And the key things have been highlighted. What you look for is an advance in science or technology, which directly contributes to the resolution of technological or scientific uncertainty. So it's not so much about what you do, it's about why you need to do it and how you do it. And if you knew the route at the start, you probably won't be doing R&D because you wouldn't be uncertain. So it's all about emphasizing why you don't know what the answer is, because it's uncertain. There are also, that's the direct approach, so that might be some developers or some scientists working on thinking about how to solve this problem that you have. That also, in addition, you can include certain indirect activities which are perhaps part of the project not directly contributing to the R&D function. And the examples that are given are things like maintenance of equipment used for R&D. So the R&D couldn't take place without the equipment working, so the maintenance time costs could also be included. Or training of R&D staff on particular pieces of equipment or techniques. Again, they couldn't do the R&D directly if they hadn't had this training. So all those costs could be included. In terms of the definition of advance, the guidelines talk about it's extending overall knowledge or creating a process or a new device which represents an overall increase in knowledge. They talked about making an appreciable improvement, and this is an area that when the government consulted back in 2015, it was felt there was not enough focus on the fact that it just has to be an incremental or appreciable improvement. They felt there was too much in the guidance, certainly, on about talking about extending overall knowledge. And actually, to make an R&D claim, it doesn't have to be rocket science. It can be just incremental improvements. Because indeed, if you're just putting science into new areas where perhaps there are known techniques, but it's never been done in a new arena or a new, certainly in the software, new platforms, that would qualify as qualifying R&D. So that's thinking about the definition of R&D and what qualifies. What we need to think now about is what expenditure qualifies the other side. We've identified our projects, what qualifies. And here the legislation is quite prescriptive, and there are subtle differences, as you will see, between RDEC and the SME scheme. So if we go down the list, staffing costs are basically your salary costs, and typically in a claim this is often the largest item of expenditure. So this is their salary and their pension costs and the national insurance costs of the employer, but not benefits. So benefits are excluded from this. It is your staffing costs. Additionally, and there has been some controversy on this, it includes reimbursed travel expenses, assuming those travel expenses are part of the R&D process, so possibly attending an R&D conference where technical ideas are shared. Next thing is consumables, and these are items that are used up or transformed as part of the R&D process. So classically, if you're in a chemistry lab, it would be reagents used as part of the your R&D experiments. Software also comes under consumables, so software is in, as is heat and light and power, which support the R&D process. The next on the list is externally provided workers, and there is a detailed and prescriptive list of conditions that you need to satisfy to qualify under this category. But broadly, it's temporary staff or staff supplied by an external agency, so typically temporary staff that instead of employing someone through the payroll, you've used a scientist from a temping agency. In clinical trials, payments to clinical volunteers are included, and then subcontracted costs are also included. The rules on subcontracted costs are complex and they differ between the RDEC and SME scheme, and I will talk about that in a moment. But those are broadly the costs that are included. So I often get asked, oh, can I include rent for the R&D facility or rental of equipment? And the answer is no, it's not, because it's not on this list of qualifying expenditure. I'd now like to think about practical things that I've encountered and just things and complexities to be aware of when making a claim. The first thing on the list there is accounting for RDEC. I'll talk about that. That's a practical consideration that has been brought on because of this above-the-line requirement. And then I'll talk about subsidies, subcontracting, and a bit on prototypes and group size. So a few of the practical things that I've seen in practice. And I will just run down them in turn. So if you look at accounting for RDEC first of all, as I said, it's a taxable credit brought in above the line, but in accounting terms, what would be the double entries? Well, it would be credit the income, there's the 11,000, we've got 100,000 of qualifying expenditure, credit the income. So the first point is, how do I classify it in my P&L? We've seen it as grant income, other income. Again, it's something to check with your auditors as to where they would prefer it. Sometimes you've seen it netted off the expenditure of the R&D department. It was brought in above the line to give higher visibility to this tax benefit, because often it was felt that the researchers weren't incentivized, they saw no benefit from this, the work they had to do to itemize maybe or assist the finance people with their R&D claim, because it all benefited the tax line. So here the idea is you've got some positive reinforcement for the R&D personnel. They can actually see it, or maybe it's actually offset against their budgets, and potentially maybe they can use it to do more R&D with. So that's the credit side to your P&L. Where does the debit side go? Well, debit, you'll only get the net amount back because it's a taxable credit, and then the other element will be either increasing your tax charge, or in the case of losses you might get it offset in the future. The things to consider, we've talked about how you classify it in the P&L in the accounts, and then the consideration is how you account for it. Do you anticipate it in the accounts? Because you'll be typically doing your R&D claim in arrears, but now with this R&D credit there's this accounting adjustment. Are you going to bring it in above the line in your current year accounts, even though you might not have submitted the claim? And indeed we've seen clients where they perhaps start to anticipate it in their monthly management accounts or quarterly reporting, but you need to have robust systems to be able to demonstrate that you have anticipated the credit correctly. And again, this is something to consider with your auditors. The next thing on the list is accounting and thinking about subsidies and funding and grants. And this is a key area because it can affect eligibility for the small and medium-sized enterprise relief. So the key thing is if you have a subsidy or you receive grants for your work is no longer internally funded and you are unlikely to be able to claim the SME relief because the SME relief is considered EU state aid as well. You potentially, because you've got a qualifying R&D project, will maybe still eligible for the less valuable RDEC. And as I'll show you in the next slide, classifying your grant income if you do receive grants and how you account for it and how you match your costs against those grant income is very important in terms of preserving R&D relief. So if you do get grants coming in, I would recommend that you seek advice earlier and possibly even when you're agreeing the contracts for the grant. Because there's a difference between when you receive state aid grants or not state aid grants as to what you can claim under the SME scheme. And my next slide shows you this. So imagine we're an SME and we have 3 projects going on. Project 1, which we receive a grant for, and that is notified state aid. Anything that comes from Innovate UK, formerly the TSB, will be state aid. Typically it says on the grant whether it is or not state aid. You might have to check with the grant funders. Project 2 you receive a grant for, but it's just a grant that is not considered to be state aid, or it might be an EU-wide funded project. Horizon 2020 is not typically state aid. Or it could be you're funding this project yourself, that's project 3. The R&D relief scheme you can claim under differs. So for project 1, say you have your grant is agreeing to fund 70% of the costs. All the costs that go against that grant, the 100% of the costs, even though you're only funded to 70%, will only be eligible for RDEC. Under project 2, the element that is funded will be under RDEC, but those non-funded costs, the 30% that is still related to that project, but you will be able to claim under the SME. So it's important that you very clearly identify and ring-fence your projects, particularly when there are grant income under state aid. And finally, your internally funded projects, you will be eligible for SME relief because they are not subsidised or receive a grant. So this is very important, and I've seen companies unfortunately lose out because they've not kept the boundaries between various projects correctly. The next area where there is complexity is the vexed issue of subcontracting, and indeed this is something that HMRC said they were going to look into in the coming months, so we might hear more on this. In a nutshell, it gets complex. If we look at the right-hand side, that's perhaps the first thing. If you are a subcontractor, i.e. you are doing R&D for someone else, someone subcontracted out an aspect of research to you, effectively you're getting funding for that, you will only be able to claim the RDEC, the large scheme. There are certain conditions, but effectively, even though you're an SME, you will only be able to claim under RDEC. If you are a contractor, i.e. you are subcontracting elements of your R&D to others, or maybe it might be a routine aspect of your R&D, some testing, some assays, something that the data contributes to your overall R&D, maybe some clinical trials, but you are not actually doing it yourself, you subcontracted that out. It's very important to know what scheme you're operating under and who you're subcontracting to. It's also important to look at the detail of the contracts because there are some circumstances where, although we may talk about it as subcontracting, in HMRC's eyes it is not. So if we are a subcontracting out work, you need to be aware of who you are subcontracting to and what your status is. So if you are claiming under the SME scheme, so your internally funded project and you're an SME, you can broadly subcontract to anyone, companies, universities or individuals. If you're claiming under the large scheme or the RDEC, which might still mean you're an SME but you've got grant funding, you cannot subcontract to companies. There is a list of qualifying bodies, which includes universities and individuals, that you can subcontract to. Typically, if they're unconnected in all cases, you can claim relief only at 65% of the qualifying costs. If you are connected, so maybe you've got a sister company, part of a group, you can elect and you are treated as being 100% connected. There are other restrictions. Subcontracting is complex. It is a thing to be aware of. And if in doubt, ask up front before you draft those subcontracting contracts. It might be that you can change clauses or be clear about what sort of services are provided or who to. A few other final pitfalls and complexities. Be aware of prototypes. At the end of the day, yes, if you manufacture a prototype or first in class or do the R&D, that will be qualifying R&D. However, be aware if in the happy event that someone comes along and buys that prototype or you are able to recover some costs, you may no longer have qualifying costs. Those R&D costs you may have to no longer be able to make a claim for. Size matters. This is just about keeping track of your limits, and in particular watch if someone takes you over, because if there's and you're bought out in the year, possibly PE investment or something like that, you're suddenly taken over by a larger group, you will be, and that group is large, you will be considered large for the entire period, not just the time that you were an SME. If you grow organically, so you've just got bigger and bigger and finally you overtake the limits, there is a year of grace. So that you have to be large for 2 consecutive years before you go up into the RDEC. Just a few points to be aware of. As I mentioned at the beginning, R&D tax relief is a success story. Every year there are more and more claims, currently about 22,500 claims. It will be more this year. That's the year for which statistics are available. However, there are always more companies that should claim and maybe need to think about claiming. It's not just your white lab coat industries like the chemistry industry. It may be wherever R&D is happening, manufacturing companies, software developers, building workers, insurance companies. If you are doing projects which satisfy those criteria, you should be eligible to make a claim. The general feeling is there are a lot more software companies out there that are not currently making claims and should think about what projects they do that potentially could qualify for R&D. In terms of practical assistance, HMRC like to engage on R&D. They are very keen to assist. They have specialist R&D claims units where people are specialised in R&D, so they deal with R&D claims. If you're very large, they say go through your customer relationship manager. But typically, most companies will engage with a specialist who is consistent in their approach because all they do is R&D claims all day. In practical terms, you can claim your R&D relief with the corporation tax return. However, the deadline for making an R&D claim is actually 1 year later than your normal corporation tax filing. So you do have 2 years from the end of the accounting period for which you're making a claim. HMRC do like to see information about the R&D work you're undertaking, particularly the uncertainties and advances and why it qualifies, not just the what you've done, and certainly come to talk to us if you think you'd like assistance in putting together the report. HMRC don't want you to undertake additional record keeping. If you have timesheets, that's great, but you shouldn't have to do additional administrative burden above your normal accounting report requiring that you have to keep anyway for HMRC. Typically, HMRC like to pay you within 30 days of receiving the claim. That is only under the SME scheme. There is no such requirement for them under the RDEC. And as I mentioned before, there is advanced assurance that you can apply for. So I think my time is up. I hope that's been useful. I'm not sure if any questions have come in.
No, we haven't had any questions, and unfortunately we are out of time. So if you do think of any questions following this webinar, please email Margaret directly using the details on the screen. This is the first of a series of our tax webinars, and the next one is on patent box, old and new, which is on the 6th of July. The more details on this webinar is available through the link on your screen now, or alternatively it is on our website. We hope that you found this webinar of interest, and we hope you'll be able to join us at another webinar in the future. Thank you very much for attending, and enjoy the rest of your afternoon.